Welcome to the Prime Property Finance Podcast with Gareth Morgan and Mark Watts. This unique podcast will dive deep into all areas of property investing finance, going behind the scenes with property professionals, investors and clients. Between us, we have 35 plus years experience in property finance. The podcast has been launched to share knowledge, mindset requirements and experiences of successful investors and professionals. We aim to simplify many of the complicated areas of finance and investing and provide valuable and easy to implement tips. Keep an eye out for our new longer episodes every Tuesday and our shorter ones every Friday.
Hello and welcome to this week's episode of the Prime Property Finance Podcast. My name is Mark and in this week we will be having our continuation with our conversation with Anthony Davies. So loads of value added in the last episode. So if you've not listened to that yet, then please do jump on it and have a listen. Really great guy. We're going to carry on with the conversation now, unpack a bit more and see what diamonds we can unearth in terms of his knowledge. So let's get on with it. Moving on to our favourite topic, solicitors. So look, we get a mixed bag. There's a handful that we work with that we know do this very well. And there's a handful, not that we know necessarily, but we've had some nightmare scenarios where things have just gone on and on and on and on. Invariably, and I think you'll agree with me on this one, invariably because the solicitor is not familiar with this type of borrowing in the first instance, and this is no disrespect to any conveyancing solicitor, this is not a residential home purchase, which they are very good at and very well versed at. These are commercial loan agreements that take a different approach.
But different rules.
Yeah, and horses for courses, isn't it? So, it's you want to make sure you've got the right solicitor on board. Otherwise, this is a long and expensive process, potentially.
Yeah. So my solicitor, who's been a solicitor for 25 years and at partner level, was pulled up the other day. That's right, someone was complaining about my solicitor, and it was the broker, it wasn't you, the broker complaining that he was having a go at the person on the other side was not a solicitor. They were a conveyancing person. They were a trainee conveyancing person. And they were trying to tell my solicitor how it worked. That didn't go down very well. And it as you say, it is different. So some people, and that's why I say to them, just because your solicitor is a great conveyancing solicitor, do they understand bridging lending? Because it is different. So I'll give you a real basic one. We had a call off somebody once at a solicitor at 5 o'clock saying, so we have to do bankruptcy searches, or the solicitor does a bankruptcy search on the day that money's let down. At 5 o'clock, he rang the firm up and said, I've just emailed you the bankruptcy search. My solicitor said, that's great. He said, you'll be doing another one tomorrow then? He said, what do you mean? Why would I do another one tomorrow? Because by law, it has to be done on the day of the funds being completed. You know that at 5 o'clock at night, you will not get funds tonight. So it'll be tomorrow. Now, I know that's really basic, but it's sort of irritating. We've had other solicitors. We get into a stage, I'm not saying I know more than that, but they just, the level of their ability, and there's a few solicitors I speak to and we're talking about writing a book about they just don't seem to understand it. And I think sometimes it's because they're trying to help their clients out, but they're not. They're better off saying to the clients, I don't do it. I don't understand bridging. It is a different metrics to, as you say, normal conveyancing. And you've got to understand, not just the speed, but the way things operate. And if you don't do it, please tell your client you don't do it and you need to find one. In fact, I know you were involved in it. There was an unusual week for us where, and this was an exceptional week, we had 8 loans we were completing on. 6 of those solicitors were incompetent. And I do mean incompetent. In fact, I know you helped out and you changed one of those solicitors to a really good solicitor then. He was amazing. But the first one, not your fault, was somebody who just didn't know what he was doing. And we had some others on that week. And so that then, again, we go back to, I'm on both sides of the fence here. As a borrower, I never used to like panel solicitors. Whoa, what do you mean panel? I want to use my solicitor. I now understand. We've thought about doing it. Not that we're at that level, but we've thought about saying, look, if you use one of our solicitors, the rate is this. Because, as you know, the borrowers pay for the solicitors. If you use your own solicitor, the rate goes up. And the reason for that, I'll give you an example. One of the loans we did, my solicitor counted it. He had 130 email exchanges with the other side solicitor where it didn't go well. On a deal that went well, we had 15. and it's a workload. And you go, and it's not just that. Clearly, a lot of loans we get involved with, the borrower wants the money quickly, and the solicitor is slowing it down.
And one of the key things that we tend to see as well is if you go to a solicitor that is well versed in bridging or borrowing of this nature, which I would say falls into the camp of bridging, they'll quote you £2,500 plus VAT. Give it as a ballpark guide as to when people ask us that, and then you'll go to a conveyancing solicitor who will charge you £750 or maybe £1,000 plus VAT. Well, clearly, when you look at it, you're going to go, well, I'll go with £1,000.
Yeah.
But the cost in time and aggravation is probably worth £3,000 or £4,000. So, yeah, making sure that you pick the right one and don't just go on price, because we all know, but buy cheap, buy twice.
Yeah. My solicitor, you can imagine we might have quite a few WhatsApps between us, but there was one I think he found or I found, I can't remember, it was off another solicitor, said, there are 3 qualities I want. I want speed, quality, and price. You can only have 2 of those. You can't have all 3. And, everyone wants speed, quality, and cheap. And it doesn't. And I guess, advice I would sometimes give to people is, we've all been there in the early days. I'll just go with anybody and I'll do whatever's the cheapest. But there's a long-term cost, or there can be a lot. It might work out well for you, but sometimes, it's worth paying that extra and going with people who know what they're doing, because you'll get a better overall deal, hopefully. It doesn't always work. I'll be honest with you, it doesn't always work. But that's where, people's reputation, recommendations are good, where, if you can get them.
And look, this is not a slight on solicitors in any way, shape or form.
No.
There's some fun, and all solicitors are doing this coming from a good place. Obviously, the fees are greater on bridging. I get it. It makes absolute sense. It's just, and I guess we only really see the bad examples, because the good examples fly through. We probably don't even notice it. So
it's not worth talking about.
Well, exactly. You only talk about the negative stuff.
It's like good tenants.
Yeah, exactly. So yeah, just want to make that clear. But I think solicitors are a major reason in bridging why the process goes slower, and it's invariably because the solicitor doesn't understand what it is they're actually supposed to be doing. So that's something to bear in mind as well. The other bits then, let's just have a look at my notes here. So we were going to go on to actually borrowing and where you get your money from. So, and I'm conscious we've been chatting for some time now. So should we just spend a quick 5 minutes just running through, just what your business model is, where the funds come from, and what you're looking for as well?
So, okay, I'll give some more advice out, not that of advice, but always tell people what you're doing and what you're looking for. And that's whatever, in the property world, I do this, what have you. So the same goes with my business in lending and borrowing. I tell people very much what I do and what I find. So I started off with just my own funds, which were limited. I've then come across some high net worth individuals that have been introduced to me, and very quickly I don't twist their arms. It's like, this is what I do. You either get it or you don't. I've had people say to me, well, if someone's borrowing, if someone's good, why wouldn't they go to a bank and borrow it? Why would they come to you? Now, obviously, again, this is the person, Dave down the pub that you're talking about. They don't understand what goes on in the real world. So I've got a database of probably 80 people, but if I'm honest with you, half a dozen regular high net worths who I deal with, who provide me with funds. Now, some of them have got property backgrounds, some of them haven't. Some of them are ex-developers who've had enough of the property world. Most of them don't want to speak to the borrowers because they don't understand it. It's not they don't understand it, but they just don't want to have those regular conversations. It isn't as easy as, because I've had this explained to me how easy my business is, where someone rings you up and says, hello, can I borrow 250,000? And I ring up someone and say, have you got 250,000 to lend? It's not quite that serious. I wish it was. But so they're most of them successful business people, typically, I'm going to say older generation, so 50, 60, 70s. Not all of them, but some of them are of that age. And I have a good, great working relationship with them, and they enjoy, they like what I do. It means they're earning a good return on it, on their monies. I never posted the banks only pay you this much, so get more from us. It's true, but as I say to people, it's about mixing. Like I've always talked about multiple streams of income. Don't put all your eggs in one basket doing one type of business. The same with your monies. Look at different ways. The reason I don't like stocks and shares, I don't understand them, but it's a lot of work that goes into that. So the reason I lend all my own money and quite a few of my family and friends, in fact, because they know me and such like, it's into bricks and mortar, and it's a good return. It's also easy. I'm going to say easy to get out with. I said I'm trying to exit some of the property stuff. You can't just. It's not like Monopoly. You can't just sell property. Whereas lending, I could literally say today I'm stopping. Okay, I don't get all my money back today, but there'll be no new loans. And then as loans come back in, the book goes down. So yeah. So those contacts, I'm open to conversations. To have conversations with people. So it's from networking. I don't go out there and advertise this. We're looking for it, but word gets around. Professional advisors, solicitors, accountants who know me and know me for a long time. They obviously know a lot about me and my business. They will introduce them to me because. So lending in one way is a very easy business. Everyone wants to borrow money, but it's about getting it right and doing the right processes that you don't get caught out, or if there is a problem, how you get around that problem.
Yeah, no, that's interesting. I think so. A couple of things you also mentioned as well around the borrowing side, or your co-lenders, as you call them. High net worth individuals, so you're not looking to speak to people who want to put their life savings into something, are deemed sophisticated. That doesn't mean they sit in a smoking jacket with a sherry. It just means they've got, some history and background. They've obviously accumulated wealth through their means and so on. So, I think it's just clear from that. And, they don't necessarily have to have a property background. They just, from your perspective, is you want to be able to work with them on an ongoing basis because of the flexibility. You don't want somebody then who's going to turn around, well, this contract says 12 months and we're at 12 months one day, where's my money? Actually, we don't quite work like that. Yes, the contract says this, but, and that sort of ability to buy into it.
Yeah, and I'm very open about it. And I don't act like a bank account for some, but what we try and do, things happen in life. And we had one guy who actually personally lends it to my company rather than into the loan, but that's a different subject. But he needed money back. And I would say to people, some people say to me, if I need my money back, how quickly can I get it? And I say, well, it depends how much you're looking for back. If you're saying it's $500,000, well, strange enough, I don't have that in my bank account. But if it's the odd 50, 200, we'll probably either have it or we can, over a short period of time, we can get it. And our view on that is we try and help those people. Why would I want to give them money back? Because guess what? So in this particular situation, he's then lent us back because it helped him over a problem that he had. Bang, and comes back, or he had needed the cash flow. So it's working with these people, and of course they then recommend you because guess what? They're talking to a lot of their friends, and we get those sort of referrals. And I would say to people, it is difficult. Private lending, lots of people won't ask the question because they're embarrassed to say, well, what do you do? I'm obviously well past that because I've done it for so long. I know it intimately. And another way of getting funds. So if you don't want to come to someone like myself, is just asking down the pub, down the golf. Be careful with those conversations. But you never know who's got money. Do not think it's the guy in the flash car. Some of the richest guys I know.
Isn't the guy in the flash car.
Correct. It's usually the quiet guy in the corner at a property meeting or something. So don't be judgmental about people, about who's got it and who hasn't, and just ask the question. And I touched on this before. You won't win me some. It's trying to help people as well. I try and help people, and that might be you don't need to borrow my money. So I once went to a meeting. So I told you I tell people what I do. I went to a meeting. I was trying to during COVID. I rented 9 Airbnbs because I had a particular market that I needed these Airbnbs for. And I met with some guy and his properties weren't appropriate. And anyway, he knew what I did and he said, I might have some money. In fact, he showed me his bank account and it had a sizable amount in there. Okay, I'll tell you, it's 500k sitting in a bank account. The following day, he rang me up and he said, can I borrow some money from you? I said, sorry? Why do you want to borrow money from me? He said, I've just had an offer accepted on a house and it's non-standard construction. So I can't get a mortgage, but I know how to solve it, but I need the money. So I said, okay. Do you know what a director's loan is? He goes, no. I said, okay, I'm not going to give you advice. I said, speak to your accountant, ask what that is, and you can get your. He didn't want to take the money out of his company because he didn't want to pay tax. He and I have become business partners because we got, I went into the long term. We had a relationship there. He ended up lending via me, and then we're doing something completely different business altogether. But, I will speak with people and go, you can do it this way. Could you do it that way? It's about we've got enough lending opportunities, more than we can handle, if I'm honest with you. So if we can help people, you hope that it's karma. It'll come back, hopefully.
Yeah, 100%. Couldn't agree more.
Yeah.
What you put out, you get back.
Yeah,
all of that good. And hopefully your money as well. You get your money back when you put it out.
Yes, absolutely. No, and that's a good point. I think it's like everything. You get networking events, whatever. I don't do loads of networking events. Online, I do. There's one that's how you and I met on Clubhouse. But it's just being kind with people and trying to help, not being stupid and giving too much of your time, etc. But, where you can, being thoughtful and helping people. Where you have the skill, don't, as some people do, give advice where you don't know what you're talking about.
Yeah, absolutely. Yeah, there's plenty of that going around, that's for sure.
Yes.
But okay, so we're nearly there. So thank you very much for everything shared so far. Tons of value. I've got loads of notes, and we could probably talk for another few hours, to be fair. But all good things must come to an end. So on one question that we're going to be asking all our guests, which, just to see the variety of answers we're going to get ultimately off the back of this. So the question is, if you had £100,000 and had to start again in property, what would you do?
Oh, that's easy. I'd lend it to myself. And lend it out. Do you know what? It is a good question. I do see this one, and it's difficult to go back to the beginnings. I think if I was to change what I did, so I've talked about I do multiple streams of income. One of the things I do sort of regret, I did a lot in the early days of commercial to residential conversions, and I kept those properties and I rent them out, and they're very good. But I wish I kept a cookie cutter. But going back a step before that, the two things I obviously one's got to remember, when I started in property, there were a few things that weren't around. The internet wasn't around when I started in property. Okay, mobile phones weren't around when I started in property. So your WhatsApp groups, your Facebooks, and all this, and it just wasn't there. So you didn't have the training. I'd be very selective and very careful about training. I've got particular views on that. I think there's some great training out there. I think there's some less great training out there. My quicker tip on that, by the way, is if someone's going to train you in a particular strategy, let's just say Airbnb, firstly, ask them, have they done it? And are they doing it now? Not they did it 5 years ago when the rules were different. So one is to get to grips and know what you want to do. I think what I would probably look to do is a joint venture. Now, be very careful with joint ventures, okay? I'm an advocate of joint ventures, but they are like marriage. And quite seriously, they are like marriage, as you would know, particularly when your bank accounts get joined up, as in you're both on the company. But I think property developers are usually looking for money. So you've got 100 grand. There you go. You've ticked a box. That's what people are looking for. If they've got the right skill set, where you go, I would like to do this. Let's just say it's a buy, refurbish, refinance, rent, etc. Get somebody who might be able to mentor you. And I think it's being selective. Spend the time finding the right people, and then potentially joint venturing. But as I say, please don't just jump into bed with someone. I don't mean that the wrong way. It's one of those things. I've done joint ventures. Fortunately, all my joint ventures have gone well. I built a house last year in the Cotswolds. That was a joint venture. Somebody wanted to borrow funds off, but we ended up joint venturing. But if it goes wrong, and I've come across a number of ones which have gone wrong, it is horrendous. And I do mean horrendous for people because of what goes on. So, but where that's great is, in a joint venture, you're looking for somebody who's got the skill sets you haven't got. You've got the money, they've got the skill sets. That's a great way then. We go, if I give you that, and you do see these earn and learn. So give us some money, and I'm not advocating those, but more I'm thinking about, and I'm not asking for someone to come in with me because I'm not doing projects at the moment, but someone like say me when I was doing projects, going, hey, I've got some money, lend you the money, but what I want to do is I want to be on site every day, and I want to see how you do, what your processes are behind this, and learn it hands on. Great in the classroom, guys, but you'll learn more in a week on site than you learn in a classroom. It's really easy in the classroom, I'm telling you. But go and see what it's like on site. I think that's easily, I couldn't have done that in some respects because when I started off, I was still in the corporate world, like lots of people. But I say I couldn't. You could do it and just do your weekends or take the odd days off. But I think that's what I would do differently. And then I used to, the course I went on did overviews of different strategies. And the idea behind that was you would choose, what do I want to do? HMOs, Airbnbs, conversions, etc., is choose your one strategy. And I do mean focus on it, just one. I know I talk about multiple streams of income, but get the one right first. Once you know it and understand it, so that you can put a team on there, but if that team's going wrong, they're going wrong, and because you've been there and done it, you totally experienced, and then you can look at doing something else and diversifying. But yeah, that would be my. If you're not lending it to me, you go off. No, but seriousness, you go off and you'd get under somebody's wing, but make sure it's the right wing you're getting under. And that takes time. You just don't believe things people say. Make sure you're getting references off other people. You've checked them up on Companies House and their company's good and solid, etc., etc. One of the things I shout about, whilst I touched on, I got a mortgage turned down recently. I was annoyed I got the mortgage turned down because my company, that particular company, was under 2 years old. The bank that turned me down, my company has been banking with them for 64 years. So my one limited company, which is 360 Ventures Limited, which was my family business, but it's now mine. It's been going since 1917, actually, but as a limited company, we were limited in 1961, and I'm proud of that, and I want to keep it. So it's doing something very different these days. But that particular bank couldn't even go, oh, well, this company's only 2 years old, but you've got this other company, we've been dealing with you for 64 years. We've got 7-figure loans with you. But anyway, so yeah, absolutely. So yeah, find the right people.
Yeah, 100%. And, joint ventures as well. Again, that's probably an episode in itself.
It is.
I'm making notes as we go. As my future episode, there's the next episode. So
I'll send you my invoice for consultancy.
Thank you very much. I do appreciate it.
Yeah.
So no, thank you. And then that's all. I think that's we do like to wrap up by sort of some takeaways, top tips. Just 3 of them as to, from a borrowing perspective. So in this particular scenario, if I was the borrower coming to you, okay, not through a third party, I just bumped into you at a meeting, what are the top 3 things you would always give advice for on how somebody should approach, present, or whichever from a borrower perspective?
Well, first of all, come to me yesterday, not tomorrow. And what I mean by that is very often people leave it too late. And not that we can't handle it, but you're putting a lot more pressure on a scenario where I need the money. I'm sure you get this with auction places. I've had a few recently. I bought the place at auction. I haven't got my funding, and I didn't know it was 21 days. It's 21 days rather than 28, etc. So do it sooner than later. And, so I will, obviously my time is limited, but I will have conversations. It's worth reaching out to people like me. I jokingly say, but it's quite serious. You should have somebody like me in your back pocket, in your toolbox. And what I mean by that is, if you are serious in property along the route, all property developers, I've yet to meet any property developer who's not run short of money at some point. Something happens, or they need money for a particular thing. So do that. I think be open and transparent. Do not think that people like myself will not do their checks. We do. On that, and then be realistic. And I think just put it in simple terms. Don't forget, someone like me sees a lot of deals, and I used to do this when I was going to the VCs. You almost need to have 2 documents. One is a one-pager, and just to let you know, I look at the bottom right-hand figure usually. I'm an accountant as well, so what's the profit? But one is a one-page. It's really quick. Our application form is very simple. It's like, what's your experience? What's your portfolio, etc. Without too much details, but that one page is going, I'm buying this property. This is the value. This is what I'm looking for. But then there might be behind that, which is really lovely when you see these great presentations. I do like them, but I want the summary first, is this is my experience, etc. Again, it does weigh. It's not that we don't lend to non-experienced people, but clearly if you can show you've got experience in this area, you've done this project before, that gives people like myself more confidence. Right, you know what you're doing, this is going to happen. And if there's a problem, and as Mark said already, there will be a problem, it's just which problem will it be and how big will that problem be? you know how to handle it. And if you don't know, my view on things, whilst I couldn't build a house, as in physically do it, but guess what? I know a few people who can. So if there's a problem, have you got the team you can reach out to? And again, I haven't mentioned that. I'm not asking for people to reach out to me for that. But if you're borrowing from me and you have a problem, guess what? I might be able to know somebody who can help you. And again, you and I have conversations about, right, you want an exit here. Well, I think you need to speak to someone like Mark, because maybe who you're speaking to at the moment isn't the right person. So those would be my brief ones, and always keep learning. I'm late 50s and I'm still learning. Some things I don't want to learn, maybe I wish I'd learned it a long time ago. But always be open-minded. But I guess the other one which we've touched on is, I look at deals, this is for myself, with two simple views. What's the best case scenario and what's the worst case scenario? And can I afford the worst case scenario? If this deal goes wrong and it costs me more and it whatever, and it loses, let's just say 100,000, what will that do to me? How would I feel? And financially, what will it do? Is that me ruined or such like? Yeah, the best case scenario is it's all great. No, it's probably going to be somewhere in between, but you do need to look at it. And as I said earlier on, clearly, if you're starting out, and the problem is you won't know what that worst case is. But it is, sitting down with the likes of a Mark, having a good broker or someone who has seen a lot of these deals, and go, what if this happens? What if it takes another 3 months? What if the valuation, you think you're going to get this valuation? What if it doesn't come in at that? I had a valuation the other day on a building. Actually, it was one that you might have financed. And the valuer walked, I wasn't there, my business colleague walked out and said, this building's worth 310 grand all day long. And he then did the valuation, he did give the sub-report. It came in at 300k. Now, okay, it didn't affect us. We got the loan we wanted. But why, don't believe everything. You go, why do you say that? We didn't need it to be 310, but why have you then gone and done that? So don't, unfortunately, guys, there's questions you just can't answer, and it happens. And, valuations are one of those where you can be unlucky and have the wrong person at the wrong time.
This going back to what's the best case and the worst case. We've spoken about this in the past as well. Around rather than pick an arbitrary number, which is like my interest rate. I stress test all my mortgages at 7%.
Yeah.
It's like, well, actually, you should stress test until they fail to understand what your failure number is. Similarly, we get asked, what's going to be the commercial valuation of this property? What's the methodology? I'm like, well, we're not the valuer. No. I know nothing about this property, and I'm not the valuer. What you should be doing, however, is saying, well, if the end outcome of the refinance is that I need to pull out 200,000 and the property's worth 250 in my mind, then does 250 get you there? Does 240 get you there? Does 230 get you there? Does 220? And then if you're saying, well, actually, of those £10,000 increments, I can only afford to drop one step before it's no longer viable, then that is a significant margin for risk.
So you raised a point there, which reminds me of my early days. So when I started doing developments, I'm going to say I knew nothing about developments, and that's not untrue. Okay, I'm an accountant in sales. And I remember once an architect telling me it was going to cost me this much. A quantity surveyor, I'm not a fan of quantity surveyors, or my last JV partner was one. Quantity surveyor, it was this much. And I said, do you know what? I can't argue with either of you, and they were different. I'm going to go and ask the builder what he's going to charge me. But one of the things I did in my early days was I did fixed price contracts, and lots of people said, oh, but you pay more for that. I go, I'm an accountant. I know now how much that building's going to cost when it's to finish it. I know pretty much what the rent's going to be. So my formulation was, I'm thinking of a particular building, which I've still got 7 flats there. It's going to cost me this much to do it. I will rent them out for that. What's my return? Am I making money on? And the mortgage will be this amount. And I think it's trying to get, I'm going to call it insurance, but taking away any variables, or at least knowing what those variables are, and don't keep thinking of the positives. Let me just take Airbnb as an example, or short-term rentals, which I do, is don't just think you're going to be at 100% or 80% occupancy and you will get X% per night. What if you're at 60% and you're not quite getting it? It's, as you say, I did listen to your podcast at that point, as you say, keep stress testing until you fail. So you then know, most of your listeners probably aren't old enough to remember when I wasn't in business doing stuff then, but when the interest rates did hit 15 or 17%, pretty quickly. It's okay, that's unlikely to happen these days, but things happen. COVID happens. As someone said to me, I'll tell you, my ex, well, not my ex, my brother-in-law was Red Arrows. Okay, he was flight attendant for that, and he was taken on he has what they call once in a lifetime instance. Things had happened. Okay, and this is a once in a lifetime, so we can't really stop that from happening. Unfortunately, in our lives, in the last few years, we've had a lot of once in a lifetime instances. Be that COVID, be that Ukraine, be that, do you know what? And so, unfortunately, there's a lot of those around. So you've just got to look, how do you protect your economy? Sorry, another bit of advice. I won't name the person, although he's a great person to follow. I won't name him just because I don't know why. Okay, I'm going to name it. Someone I'm a big fan of. There's a guy called Adam Lawrence. He's the brightest guy I know in property. I'm lucky enough to call him a friend. I've done stuff with Adam. I did some mentoring of him. He talked about America. It's like, really, Adam, what's that got to do with me? I'm in the UK. I now know, it's that what's going on in there comes across here. And it's not listening to one bit of advice he gave me once. It cost me tens of thousands. So, it's making sure you're following the right people or know the right people and what you should be looking at. Some of it you can't change, and you know what? Don't worry about it. It'll happen. And that's another thing, I guess. Don't worry about things you can't change.
Manage your manageables. Yeah.
Exactly. Get on with them.
Yeah, there's, and absolutely, I'm getting better at that, which is living in the moment, being present, not worrying about tomorrow, all that good stuff.
I'm told that's a good place to be. You must tell me.
Well, yeah, so getting better. Tomorrow hasn't happened yet, so that's.
I think and I do think property is a great business. It's changed a lot. There's certain people I listen to, and it has changed a lot. And it's not it's easy in lots of businesses, but you just don't think. What annoys someone the other day said to me, why is it people think they've been working whatever job they've done for 10 years, I'm going to replace, and they're taught to replace their salary within 12 months. What, you think you're going to go into a new industry and suddenly you're going to make more money in 1 year than you would have, you've been doing 10 years as an accountant or whatever it might be. So don't think it's got, gold overnight. The gold is there, but it just takes some time. And it's hard work.
Absolutely, and that's right. So the property landscape. When you speak to people, it's just changed. Yes, it is. It's becoming a little more challenging, difficult. There's reasons for that, good and bad. And again, that's probably another episode in itself as to why these things are going on. So. Yeah. But no, thank you very much, Anthony. Really appreciate it. As I say, we can talk and talk and talk. There's loads of stuff, so perhaps there's stuff we can pick up at another time as well. But just again, thank you very much for your time and sharing everything, all your experience and your advice. And I really do appreciate it. No, thanks, Mark. And anyone who wants to reach out to me, probably the easiest way to find me is on LinkedIn, Anthony Davies. Davies spelt the Welsh way, Davies. The right way. The right way. I wasn't going to say that, but you're right. So I am on social media. I don't do a lot on that, but LinkedIn is the best way. Or I'm sure if you were to contact Mark, he would also pass on my details. Mark has all my details, so I've got no problems. I'm more than happy to whether you're looking to lend money or borrow money, I'm happy to chat about deals and what I would suggest. Obviously, Mark's knows more about the holistics than I do of that. We're very much focused on a niche area, but more than chat. Absolutely, and what we'll do, we'll put your details in the show notes as well, so that people can find you nice and easy and follow you. Because I see that you do updates on LinkedIn as well, which are interesting and highlight some of the cases you do and stuff like that. So once again, thank you ever so much. I really appreciate it, and we'll speak again. Mark, good to see you. Thank you very much. Fantastic. So there we are. Plenty of stuff to talk about and share. And I'm sure we could do another 2 or 3 episodes of that. And he's got plenty of information or knowledge to share with us. So thank you again, Anthony. Really appreciated that conversation with you. So hopefully, as you can see, the way that we deal with private lending is somewhat different to that of traditional sources of finance, i.e. bridging, mortgages, etc. It's probably more akin to bridging, but with, he can make his own decisions off the back of that and gives you a bit of an insight as to the underwriting or the considerations where it comes to security. How am I going to get my money back? How do I price things, and so on and so forth. So once again, thank you very much, Anthony, for your time. Really appreciate it. Thank you guys for listening. Hopefully it's adding value in these episodes. And if you need to get in touch with us at all, just please dive into the show notes. You can find us at primeproperty.finance, and we'd be happy to have a chat with you around anything that's been covered in these episodes. So thank you very much. Take care, and I'll see you on the next episode. Thanks, guys.
Thank you so much for listening to our podcast. We hope you have learned something and have some tips to take away. We'd be very grateful if you enjoyed the show. You could give us a review and share with anyone that you know that may be interested. And of course, subscribe to the show so you can get notified when a new episode is released. If you'd like us to answer any questions or go deeper on a specific topic, please drop us a message at primeproperty.finance. See you on the next episode.